So in this trade recap, I want to go over a swing trade that I did with my team. This was a great small account trade. Our fills were $85 per contract, right? So, even if you have like a couple $100 in your trading account, this was a trade that you could have taken. All right, so the exact option that we took was ExxonMobil calls 1217 expiration, 63 strike. Okay, they were 63 strike calls. They expired next week, so they were slightly out of the money. So the way the ExxonMobil's option chain works is usually every 50 cents, there's a new strike. Okay, so they were slightly out of the money. They weren't at the money. They were slightly out of the money. Okay, how we did this trade was really, it was day by day by day. We were watching the setup. Okay, first things first is we were watching, or actually no, first things first was preparation. Okay, I identified this setup for my team. I posted it in my server for everybody to keep an eye on in case I just happened to miss it. Was this descending wedge. Okay, preparation is so key in the stock market. Okay, I prepared Sunday night every night, or every Sunday night every week, with a weekly watch list full of charts that I post for my team. This ExxonMobil setup was one of the ones that I was watching, and I told my team, watch this setup, okay? This was a beautiful descending wedge setup that we can see right here, okay? Price had been making higher lows, but we can see price held a support trend line. Not to mention, let me zoom out here real quick. Oops, excuse me. For ExxonMobil right here, we can see that this trend line from all the way down here held last week through some bloody sell-offs that we saw in the market. Okay, ExxonMobil held support where it was needed. Two different support trend lines were held as technical support for ExxonMobil. Okay, this breakout of this descending wedge is something that I had been eyeing last week. However, this is only part of my reasoning or my conviction for why this setup was on my watch list. Let me bring you over to /CL, which is crude oil futures. Okay, if you trade oil stocks or energy stocks, you need to watch crude oil futures. Okay, they pull on the stock market the same way that the S&P 500 does for oil stocks. Okay, it's a very unique sector to trade. You have two different markets pulling on it. You need to watch oil futures if you're going to trade oil stocks. /CL, this was another setup that I put my team on. Watch /CL because last week, it was due for a pullback because it had been trading at highs it hadn't seen in a very long time. So /CL, oil pulled back with the stock market. That was great and all. This is where I've been telling my team for the last couple of weeks. Watch for oil to bounce. When oil bounces at this demand zone, that's when we can flip bullish and go long on oil stocks, okay? We got this dip, I believe last Wednesday is the day it was. And if you notice, this was the dip. Look at this beautiful reversal candle that /CL gave us. This was all we needed as far as conviction goes to go long on oil. Once I saw this reversal signal from oil, I knew oil stocks were then the next move, okay, because they would follow suit. So we have ExxonMobil in a very nice descending wedge. Remember, a descending wedge is a reversal pattern, okay? Price had been downtrending for ExxonMobil. So now we have the reversal pattern, and now we have our breakout to the upside, okay? Now, there was more that went into this, okay? How do we time our entry, okay? Because we got a really nice entry. Well, let me break it down to the 30-minute time frame for you. We didn't enter this trade until not Saturday night, until Tuesday afternoon, okay? And here is why. I'm actually going to hide my fib levels real quick because they were not needed at this point in time for this trade, okay? Here's a couple of things that I noticed about ExxonMobil's price action, okay? First off, yesterday morning, okay, Tuesday morning, really strong open for ExxonMobil, but then you notice it fades throughout the rest of the day. Okay, that's interesting. The move is not over yet for ExxonMobil, okay? It faded yesterday's opening market or opening bell drive, okay? So that's something I noticed. This is what I noticed right here. A double bottom just above the 30-minute 21 EMA. That is what caught my interest, and that's when I knew it was time to enter. Okay. However, we can see this 30-minute candle right here ended up pulling back with the rest of the market. So SPY sold off yesterday in the close by a couple dollars. It was a very big day for SPY yesterday. So naturally, ExxonMobil is going to sell off with the broader market. Okay, that's what's going to happen. It's a weighted name in the S&P 500. It is what it is. We got to roll with it. So our swing position yesterday into close was red going into close. We were down like 10% or something like that. So nothing drastic at all. Here's another thing that I noticed right here. Look at the highs that ExxonMobil saw on Monday. Okay, this is the highs where price action or where buyers were rejected at and then the moves faded. Okay, so now come into Tuesday morning. ExxonMobil gaps up, Look where buyers step in on the 9 a.m. candle, and look where buyers step in on this 3:30 p.m. candle. They stepped in and held price above old resistance. Old resistance is now new support for ExxonMobil. That was all the conviction I needed to keep my swing position overnight, even though we were swinging a red position. It was only down by 10%. That's all the conviction in the world I needed. Okay, forward/CL still looked very, very bullish on the daily time frame. And remember, we bought time. Okay, the date of this recording, we entered this trade on December 7th. Our expirations for these calls were December 17th. We had so much time on our side, and I only wanted to go in the money for these calls. And we were in the money this morning. ExxonMobil, as you can see right here, it's faded its move yet again. Oil stocks are a little choppy right now. You can see CBX is barely green, Oxy is barely green. ExxonMobil is actually doing the best out of the three of them. Okay, ExxonMobil had a really, really beautiful opening drive this morning, and our calls were in the money. I told my team, look, if we can catch a $1 move out of this ExxonMobil trade, we're going to be sitting around 50% profits. Now, we didn't catch a $1 move based on where we entered and how the closing price of ExxonMobil was yesterday. But guess what? We sold for around 30 to 35% profits this morning. Our calls were in the money. That's all that we can ask for in this market, right? We want to be green. We want to focus on quality over quantity, and that's what I do for my team every day, okay? Again, let me reiterate one more time, and let me break it back out to the daily time frame. This ExxonMobil descending wedge setup, combined with forward/CL, which is crude oil futures, bottoming in a demand zone, that is a bullish confluence, and confluences create high probability setups. That's what separated this swing setup from every other setup that I saw yesterday. I put my team into our calls that we swung. It was a one-night swing, okay? You can always control your position sizing and whatever. 30% plus profits this morning. That's all that I could ask for, and I was really happy to put my team on to this trade. All right. I hope you enjoyed this swing trade recap. I hope you learned something from it that you can apply into your own trading, because that's the goal of these. That's what I want your takeaway to be from these trade recaps. Okay. If you have any questions for me, feel free to leave them in the comments below. And if you're interested in joining my team, I am going to post my server link in the description down below as well.